Happy New Year, everyone! 2019, in my opinion, is going to be such an exciting year for dividend growth investors. This is going to be a year, in my opinion, where some values emerge. They're going to be values that long-term investors can totally, in my humble opinion, enjoy, take advantage of, get in at bargain basement prices. I think the stock market is going to continue to trend down over time. So I am personally really excited about 2019. It's been very busy for me the last few weeks, both in my life with all of the holidays and everything. It's been a wonderful holiday season, but also in the stock market. So I recently made a variety of purchases in late December. I'm going to share all of those with you today. And I also have big plans for January. So today's video is all about my recent stock transactions, where I am focused for January of 2019, and also some wisdom and some thoughts about how I'm approaching 2019 in general. It's a great time to be a dividend growth investor. Let's get started. So I want to jump right into it. Apple. You guys know, if you've been following me for a while, that I initiated a position in Apple, ticker symbol AAPL, in December. I originally bought December 13 at $171 and change. It has fallen. This has been a stock under a lot of pressure. I bought some more. Thank goodness. I love it when a stock that I start buying goes down, because it gives me an opportunity to average down into progressively better prices. Moreover, when I buy a new stock, I never put all of my capital into it at once. I average in over time, and I do it for this precise reason, because I know oftentimes that better values are right around the corner. So I got my foot in the door at 171 and change. Fast forward to December 26th, the thing has plummeted to 151 and change. I bought more right there the day after Christmas. What a wonderful Christmas present. So exciting to see Apple fall. And now, by the way, it's at $148. I will continue to buy more. This is going to be a little bit out of my personal rules. My rules for 2019 are going to be very focused on my top 10 stocks. I've actually expanded that to top 15, so I want to be really focused on the core of my portfolio, especially positions in the top 15 that are either great values or very underweighted as compared to where they should be. Apple is not in my top 15. That being said, it's a newer position. I want to bring it up to size, and I totally believe it's a bargain basement value at these levels. So I look forward to adding more. I hope it stays below $150. But I'm at least at this point just so thankful I got in and bought more at 151. Why is this stock going down? There's a lot of bad drama around this trade war. So I get questions from my subscribers. This is a perfect time to answer this question. By the way, I am so blessed with the subscribers here. We are 19,000 dividend investors strong. What an amazing community. Thank you to everyone who's part of the community, everyone who subscribes, likes, comments. That is the best way you can thank me for these videos. I love you guys. So anyways, people have been asking, subscribers, Ian, what do you think about the trade war? Here's what I think. I don't want to get political at all. And so I'm not taking sides on either side of the fence here. But what I do believe is in a mean reversion. I believe over the long run, things tend to revert to the mean. So our current president, President Donald Trump, he is all about protectionism. He is all about having tariffs and playing hardball in terms of international trade with other countries. I think this has almost started a domino effect around the world, and that's the situation we're in now. Because of the trade war, it's going to create some pressure for companies like Apple and others who do business internationally, who have a lot of manufacturing happening overseas, who sell products internationally. There is going to be an escalating trade war. And it may, in fact, affect short-term numbers. There was a recent announcement by Apple that it will actually be doing this. That being said, when we look at what's happening now, in my opinion, you fast forward another 5 or so years, it's all going to go back to where it was before. This is the funny thing about politics, and again, I don't want to be too political here. I'm not taking either side of the fence here on YouTube, But what I will say is when anything, it's kind of a swinging pendulum. When anything gets too aggressive on one side, it's going to swing back to the other side. So I would not be surprised come the next election. Who knows what's going to happen? But when the next president gets in office, that is if President Donald Trump does not secure a second term. I don't know if that will happen or not. If I had to guesstimate, I would probably say, again, not taking sides, not saying I agree or disagree with this, but I personally believe the next president will not be President Donald Trump. I do not believe he will secure a second term, but you never know. But whoever is in office next, I believe all of these trade issues, all of this trade stuff will dissipate. And so as a long-term investor, I love this stuff. I absolutely love it because it creates buying opportunities for world-class companies like Apple. And I don't care if Apple keeps going down. In fact, I hope Apple keeps going down because this company is going to keep innovating. They have an amazing balance sheet. They can weather the storm. There are going to be no major catastrophes, in my opinion, that will adversely affect this company over the long term. And I'm looking 20, 30 years out. I'm not looking at the next few years. And so for a dividend investor, for a long-term investor, someone that wants to live off of dividends over the long run, dividends that Apple pays me, I love this trade war. I love it. I can't get enough of it because I know in the long term, it's just going away. It's just going to be a little blip on the radar in the long term. But right now, the media loves it. It's becoming a big drama. I think a lot of politicians are at odds with each other over it. And hey, bring it on. I love it. It creates opportunity. But anyways, looking, 5 years out, I don't even think we will remember this trade war, in my humble opinion, especially 10 years out, but even 5 years from now. So moving on, 3M. I bought more. If you've been following my channel, I averaged in over the course of 2018. New position for me, my number 10 favorite stock of all time. And I love this company. I bought more on December 26th. Again, Christmas present from the stock market here. Bought in at $180 and change. Wow, is that a good price for 3M? It's already back up to $191. That said, I think it'll fluctuate here, and I'm definitely going to be buying more. 3M falls into my persona, my strategy for 2019, which is all about my top 10, top 15 stocks. They make it into my top 10, 3M at number 10, so I'm excited for that, and I was so happy to buy some day after Christmas. Now, this one may surprise you. I'll link in the description below. I recently published a guide on sin stocks that I wrote. This is a really cool guide. It's free. If you haven't downloaded it yet, please check it out if you're interested in sin stocks. One of the sin stocks that I own, BTI, it has been under just a ton of pressure. And the dividend yield right now, actually starting yield is upwards of 8%. So this one's kind of an outlier. It's not in my top 10. It's not in my top 15. Not part of my charter for 2019. That said, I can't not buy it at these levels. I am deploying money. I will probably continue to deploy money. I can't pass by that 8% yield. So I bought some on December 28th at 32 and change. It's now still 32 and change. But as long as it stays at these levels, I will probably buy more. That said, it's not my core focus right now because I already have too much allocation, in my opinion, to sin stocks. But at the same time, when an entire industry is under pressure and I see 8% starting yield, hey, that's cash flow that I could use tomorrow to pay bills. 8% off the bat, even if they don't grow the dividend over time. I believe the dividend is secure, in my humble opinion, and I believe they will grow it, quite frankly. I think they will thrive over the long term. That being said, even if it doesn't, 8%, I will take it all day long. That is a great starting yield and literally yield that I can use tomorrow to pay bills. Yield I'm getting from 3M and from Apple tomorrow will not really pay the bills. And I'm not paying the bills of dividends yet. I'm reinvesting everything because I want my snowball to accumulate and to have a massive stream of dividends. But let's say something happened, I made a decision, I wanted to change things up, I wanted to start paying bills. BTI, bam, 8%, I can do that. Apple and 3M, the starting yields are low, but the growth rates are really high. So I need to wait. I need to wait probably a good 10 years, I would say, before the yield on cost becomes meaningful for those positions. But at that time, it'll be real meaningful yield on cost, real good opportunity to pay bills with dividends that I'm getting on these shares on 3M, for example, that I just bought on December 26th. So these are some of the buy orders. I made some more buy orders in December as well. I've covered some of those in prior videos and commentary. These are some of the late December ones. So I was pretty active, pretty busy, and I just wanted to take advantage of it because the stock market really tanked. It had poor performance around the holidays, and that's abnormal. Usually there's a Santa rally. Usually the stock market goes up around the holidays. So I just wanted to go for it and take advantage of those deals, those offers, and thank goodness they're here. So fast forward to January. What are my priorities in January? By the way, please share in the comments below your priorities. Where are you looking right now in the stock market? This is a thriving community. We are dividend investors supporting other dividend investors. So I want everyone to voice their opinion here. Make yourself heard. Share which stocks you like right now. I would love to hear. But here are the ones I'm focused on in January. First and foremost, United Technologies. I am so excited. This is my number 4 favorite stock of all time. Underrepresented in my portfolio. Strategic focus for 2019, and it finally happened. This stock has come under pressure. I think some of it is trade war related. Some of it, quite frankly, is the fact that they're splitting the company into 3. I am jumping all over this because the stock price is $107. The starting yield is 2.7%. Doesn't sound exciting, but this is pretty good for UTX. And the PE estimated for 2018 based on analyst consensus estimate for what they will earn in 2018 comes in at a 14.88. 14.88, in my opinion, for UTX is a bargain basement valuation. And so I am probably going to go very aggressively on this one in January and throughout the year. This is going to be one of my main focuses for 2019, strategic pillars. For 2018, I had strategic pillars. I'll link in the description below if you want to revisit what I was doing in 2018 at the beginning of the year. 2019, not only January, but throughout the year, United Technologies, I am going to hopefully over the course of the year double the size of my position. And that will take some serious concentration and effort, focus, and it might even be boring because I need to stay laser focused on this one stock, but I am ready for it. I am excited. So number 2 stock that I am looking to buy in January is Pepsi. And so Pepsi, I'm not going to buy a lot, but I'm going to buy this stock monthly throughout the course of 2019. It's my number 2 favorite stock of all time. I love this company. It's not at a bargain now. It's not a good valuation. It's trading at $110, 3.36% starting yield, and an estimated PE for 2018 of 19 and change. So it's not, I would say, overvalued, but it's not fair. It's not value or deep discount value either. It's kind of, I would say, fairly valued. It's a fair value. My number 2 stock. Over the next few years, I hope to double the size of my position in PepsiCo. And so to do that, I just need to go for it. I need to work on it. I need to stay focused. So I'll be buying bits and pieces of it each month this year. Probably won't go as heavy as I do with United Technologies because it's not on sale, but I just got to go for it because strategically, this is my number 2 favorite stock. I want it to be a very, very large position in the portfolio. So moving on, I love this. Cedar Fair, ticker symbol FUN. I wanted to buy some in December, but I ran out of money. I spent all my money on these guys. And so Cedar Fair has been under pressure. They actually just bumped up their distribution. I love that. The starting yield right now is 7.6%. This is yield I can literally use immediately to pay the bills if I wanted to, although I will be reinvesting my distributions. And so Cedar Fair, it is a top 15. I expanded my to top 15 because I see a lot of value in stocks number 11 through 15. And so I'm going for it. I'm going to buy more Cedar Fair in January. The thing about Cedar Fair is it's a master limited partnership. There are K1s, there are tax consequences, and because of that, I try to buy it in bigger lots, bigger chunks, just to keep the accounting really simple. And so I'm looking forward to that. I will link in the description below, by the way, to videos about all of these stocks, UTX, Pepsi, Cedar Fair. The Cedar Fair one you may want to particularly take note of because I have a free Excel spreadsheet in that video that I provide a a link to in the description so you can get that free spreadsheet. And it shows you how I personally analyze a stock, how I analyze Cedar Fair. And the reason this video, in my opinion, with the spreadsheet is really helpful is Cedar Fair is actually difficult to understand because it's a master limited partnership. There's a lot of depreciation and it gets wacky. And so I don't even list a PE here because you don't really look at PE for something like this. You look more at cash flow. And so check out my spreadsheet. You'll see the cash flow there. You'll see how the cash flow covers the distribution and how I analyze that stock. But I think they're doing just fine. They're under some pressure. Look, it's not the season for Cedar Fair now. They had some Winterfest and some parks and events open during the holidays, but most of their business happens in the summer. The 48.77 share price right now is lower than where I've bought it. I've always bought it in the low 50s, and so this is an opportunity to average down to get a higher starting yield. I love it. So these are three for sure that I'm going to be buying in January, and then I'm thinking, well, actually there's a fourth I'm buying for sure, General Mills. I'm averaging in monthly to General Mills as long as the share price stays low, building up my position. For those who are wondering, I probably won't buy Kraft Heinz. It's just not in the cards for me. I'm just going to stick with my General Mills and build it up. I don't have a clear reason for that other than I want to keep the number of my positions manageable. I have 39. I don't want to bring it to 40 with Kraft Heinz. It probably will reach 40 sometime in 2019 or 2020, although I don't want to do it with Kraft Heinz. My gut, it really comes down to don't want another position, and quite frankly, I'm following my gut, which is important sometimes in the stock market to follow one's gut. My gut just tells me, Ian, don't do it. Stick with your General Mills, and that's exactly what I'm doing. So what else may I buy in January? I have BTI and Apple listed there. I may buy either both or one of those. We'll see. Probably not because funds are limited, and I need to deploy the funds in the top three that I have a focus on right now for January, and quite frankly for a lot of 2019. I don't know if Cedar Fair will become a focus for 2019, but it is a top 15 stock. Certainly Pepsi and UTX throughout the year are going to be a focus for me, so I got to stay focused. But I may buy a little more Apple, may buy a little more BTI. We'll see. I just can't ignore the value. So third, I want to just shift in here to some strategic frameworks, how I'm thinking about 2019. So first and foremost, I need to pace myself. I want to share an example. If you follow me on Instagram, I'll link in the description below. Please do. I really enjoy engaging with all of you guys here on YouTube, but also on Instagram. You probably noticed that I enjoy running. I enjoy exercise, fitness. One of my personal goals for this year is to take my running to the next level, actually. I really want to become the best possible runner I can be. Anyways, December, I started working out a little too aggressively. I didn't pace myself, not only in the running, but everything, exercise class, swimming, weights. I took my workouts to the next level a little too quickly, and I really hurt my lower back by not pacing myself. I was in an exercise class. I was transitioning from one exercise to the next too quickly. I wasn't pacing myself. Overall, I was doing too much exercise throughout the week as well. I wasn't pacing myself. Bam, lower back took me out for a week. First few days I was in bed. I could barely walk. When I was walking, I was like holding on to things to prop myself up. I could not stand up straight. And hey, it's all better now. And I went to my chiropractor. He really helped me out, but did a lot of stretches as well and just iced it a lot, gave it the time to recover. I'm all good. But this is an example. This relates not only to fitness, but to the stock market. Stock market is probably going to continue to go down. I need to pace myself. I went pretty heavy in December. I'm going to probably go reasonably heavy in January. I need to just remind myself, though, throughout the year, I need to pace myself. I don't want to get ahead of myself because I definitely don't want to dip into emergency fund, but also I just don't want to feel uncomfortable. I don't want to feel like I'm going too quickly. I don't want to feel like I'm deploying too much too quickly. There's no reason to. There's absolutely no reason to because I'm a long-term investor. I'm a dividend investor. I'm always buying, so there's no rush. I'm just going to deploy slowly and steadily, and so that's one of my rules this year is to pace myself. And I've gotten better out of this over the last few years. 2018, I would say I paced myself pretty well, and I'm going to continue to do that in 2019. Also, I already mentioned this, but I have a top 15 focus. I'm going to really focus on the core of my portfolio. Both of these stocks, UTX, actually all three, UTX, Pepsi, and Cedar Fair, they're all in my top 15, staying focused on the core. I'm giving myself a little leniency, though. I want to basically have a goal that 75% of new capital deployed throughout 2019 will go towards top 15 stocks. But I'm reserving 25% of new capital to go towards other stuff like Apple, like BTI, and other General Mills, for example, other stocks that are not top 15. So that's how I'm approaching 2019. I'd be curious, do you have any strategic frameworks you're thinking about for 2019? I think it's going to be a buyer's market. I think it will continue to be very good for anyone who is accumulating dividends, who is reinvesting dividends, who is building the snowball. I'm excited about it. So I'd be curious what you think about this stock market. Before I head out today, some housekeeping. I am going to have a meetup either in January or early February for local Bay Area, San Francisco Bay Area subscribers. So if you're on my Bay Area crew, I will have an email going out to you guys soon. And if you're not on the Bay Area crew but you want to be on it, I'll link in the description below how you can sign up. And we will meet, again, we'll have a really fun meetup, likely at the Starbucks Reserve in San Francisco. In terms of full disclosure, I am long Starbucks, ticker symbol SBUX. I own that stock. Love it. Awesome. Top 15 stock. Hope to buy more in 2019, but not on sale right now. Love you, Starbucks. And anyways, so what else? In terms of housekeeping, I have recently shared my full dividend stock portfolio. If you missed out, you haven't seen it yet, I'll link in the description below to how you can sign up and receive my full dividend stock portfolio. Everyone, I am so excited about the new year. It is such an exciting time, and I just want to wish you a happy new year. Thug life. Hey, before we leave today, in terms of full disclosure, I am long. I own the stocks mentioned today. I am long. I own Apple, ticker symbol AAPL, 3M, ticker symbol MMM, BTI, ticker symbol BTI, United Technologies, ticker symbol UTX, Pepsi, ticker symbol PEP, Cedar Fair, ticker symbol FUN, General Mills, ticker symbol GIS, and Starbucks, ticker symbol SBUX. I own all of those stocks in my personal stock portfolio. Also, before I leave today, in terms of a friendly disclaimer, I'm not a licensed investment advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally just sharing my personal journey for fun and entertainment here on YouTube. Hey everyone, I will see you in the next dividend investing video.